You'll get more with a spot ETF. You'll get more institutional adoption with clarification of the ETF and accounting rules, etc. Right now, MicroStrategy is really the most famous company to adopt Bitcoin as a treasury asset. But imagine what happens when Apple Computer is buying $1 billion of Bitcoin a month. Or what happens if Microsoft, Berkshire Hathaway has $160 billion of cash. Apple has $150 billion of cash. These things are liabilities. So we still have a lot of corporate adoption to look forward to. And you're talking about, people that they could bring 5, 10, 20, $50 billion of capital to the market.
Today we are joined by Michael Saylor, who shares his upcoming prediction for Bitcoin and why he's bullish in 2024. The upcoming Bitcoin halving event set for April and the impending approval of a Bitcoin spot ETF by the US Securities and Exchange Commission. The SEC is actively reviewing multiple applications for this ETF. Thanks to BlackRock's significant influence, there's an increasingly strong belief that, in the not-too-distant future, we'll witness the approval of at least one Bitcoin spot ETF. This would mark an historic milestone for the Bitcoin community, a moment many have been eagerly awaiting for well over a decade. The green light for such an ETF would carry profound implications for the world of cryptocurrency and would serve as the gateway to substantial institutional investments, drawing interest from sovereign wealth funds, major corporations, and even governments. Saylor envisions that this development will pave the way for large corporations to incorporate cryptocurrencies into their balance sheets. Let's get right into the latest interview with Michael Saylor and why Bitcoin is poised to revolutionize cryptocurrency heading into 2024. Don't forget to share your thoughts and comments down below, and leave a like if you enjoy the content we do here.
That will drive growth faster. And then when everybody understands Bitcoin as well as they understand the S&P index, or as well as they understand commercial real estate, kind of grows double at the rate of stocks because of all the reasons I pointed out. So why is Bitcoin in high growth mode? Well, mature Bitcoin over 100 years, high growth Bitcoin is in the next decade, where we are now and where we'll be for about a decade or 2 decades. And it's growing faster than that mature rate. And it's growing faster because of monetary inflation. Adoption is being driven by these massive inflation and global unrest. And so as people reallocate their capital from real estate and stocks and other assets and currencies, it's going to drive Bitcoin at faster than that long-term rate. And so you're getting an avalanche of retail adoption. Now, over a long time horizon, laser focus is rewarded. I have laser eyes on Twitter. You can see the laser eyes. What's the point? The point is, think out 100 years. Think why? Not because you're going to live 100 years, but because thinking 100 years is clarifying. If your family had thought 100 years in advance, you wouldn't be here. If your government doesn't think 100 years in advance, there would be no cities. If you're going to do great things, you need to look out 3 generations. It's very clarifying. And all of the mistakes, all the fear and anxiety that makes you do stupid things or makes you do knee-jerk things that destroy wealth and create chaos, they come about because people are thinking about 3 months or 3 weeks or 3 days or 3 years. And so my advice is for you, when you're thinking about more than 4 years out, think about yourself, your life, your children, your children's children. Now, if your family or your company had $1 million, a lot of money, I grant you, but if you had $1 million, if you invested it, in cash at a 7.5%, or 7% degradation, you're going to end up with $900 worth of value left after 100 years. Your money's going away. You're going to destroy all your wealth. If you invest $1 million in bonds at a 5% yield, or a 5% pre-tax, or a 3.5% after-tax yield, and hold it for 100 years, you will lose 96% or 97% of your wealth. You'll go from $1 million to 31,000. Bonds will destroy your wealth. If you invest in the S&P index, you're just going to have the same amount of money after 100 years that you started with. You're not going to make any more. If you were to split that portfolio between the S&P index and Bitcoin, and this is assuming 7% for the S&P and 14% for Bitcoin, and assuming 7% monetary inflation that I talked about, you're going to convert $1 million into $512 million. It's extraordinary.
The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. However, Saylor asserts this journey is just beginning, comparing the initial years to the current widespread interest and investment, with a giant spotlight on Bitcoin ETFs. Saylor highlights this being a significant development in the financial ecosystem. He also suggests that BlackRock, under the guidance of Larry Fink, will lead the charge in obtaining regulatory approval for a Bitcoin ETF. This move, he contends, will underscore Bitcoin's enduring relevance as an asset and its potential as a hedge against currency devaluation.
If you simply invest the entire amount in Bitcoin, you're going to go from $1 million to $1 billion. It's 1,000x. You're going to double your money 10 times. And so you can see the difference between a mediocre strategy, a conventional strategy, and a winning strategy. So let me say it this way. $1 million invested for 100 years leaves your family with a real net worth. If you invested in the peso in ARS for 100 years, you will have 28 cents. 28 cents. If you invested in the US dollar, you'll have $700. You'll have $1 million in the S&P index of companies, and you'll have $1 billion if you invested in Bitcoin. And so that's the big idea. Bitcoin is economic armor. Right? When you think about it, we talk about it. If you think long enough, it is economic armor. It will protect you from the economic wars to come. And there really isn't much else that will. Whatever you do, just make sure you don't lose the money, right? This is common sense. So when you're actually making a decision, an investment decision, you've got two things to decide. One thing is, what asset do I buy? And the second is, how do I custody the asset, or how do I avoid losing the asset? It's not enough just to buy the Bitcoin. You actually have to make sure that no counterparty steals, loses, or destroys your Bitcoin. So when you think about counterparty risk, your wealth can be impaired by the failure of any counterparty you're required to trust. And so there are three broad categories of counterparties everybody has to deal with. People, you're a counterparty, your family, your friends, trustees, people you trust, your lawyers, your accountants, your money managers, your employees, executives at a company you work at. They're all people, right? And you have to trust them. You also have to trust corporations. The issuer of the asset, the producer of the product, a trader, a developer, the custodian, the bank, the exchange, the network. If you own a stable coin, you're trusting the issuer of the stable coin, you're trusting the network the stable coin trades on, you're trusting the crypto exchange that holds the stable coin, and then you're buying a stable coin that represents probably the dollar, which is going to lose 99.9% of your money over 100 years. So it's a bad asset, in my opinion, over the long term, and you're going to have a bunch of counterparties, and you have to understand them all. So keep in mind that you're always trusting counterparties. They're either people, or they're corporations, or they're governments. You have a building, the district can rezone the building. The mayor can rezone the building and seize the building. The state, the province can seize the building. The government, is a counterparty. The federal agencies are counterparties. International agencies are counterparties. So when you're thinking about whatever you're owning, whether it's a building or a piece of art or a bar of gold or a stock or Bitcoin or a stable coin or a crypto asset of some sort, whatever it is you own, you only are going to get the return if none of these counterparties fail you. And so first thing to do is make sure you understand who your counterparties are. The next thing you got to do is manage your counterparty risk. Over a long enough timeline, every person, every corporation, every government, will fail. So Bitcoin is fueled by chaos, and it's a very valuable thing. So I'll end with the point on the future, which is the near-term catalysts are going to be fair value accounting, the Bitcoin spot ETFs, and the halving. They're all coming. The world is going to reevaluate all these assets, and what you're going to see is they're going to demonetize the other assets and shift them into the Bitcoin asset class. And as they do it, when Bitcoin replaces gold, it should 30x from where it was. And when they replace all of the other assets, there's no reason why it can't 500x. This is just a matter of education. So, in summary, no country can stop inflation. The companies can't outgrow inflation. Workers can't outwork inflation. Few are going to beat the market by skill or luck, but everybody can buy Bitcoin.
Saylor challenges the conventional macroeconomic metrics, asserting that these metrics are often manipulated to paint a specific narrative, like labor statistics and inflation figures, which are selectively measured to create desired effects rather than reflecting the true state of the economy. In this context, Bitcoin emerges as an alternative, detached from the manipulations of the conventional economic sphere. Saylor also highlights that established corporations like Apple, Amazon, and Google will use their established relationships acquired over decades to swiftly acquire substantial amounts of Bitcoin through a spot ETF, bypassing the cumbersome processes involved in procuring the actual commodity. This disparity underscores the transformative power of cryptocurrencies in traditional financial institutions. Michael Saylor underscores the importance of embracing digital currencies as the economic landscape is changing rapidly, and urges investors to leverage Bitcoin's potential to secure a more prosperous financial future. What do you think about the latest interview with Michael Saylor? And how do you think Bitcoin's trajectory in the coming months will impact the crypto market and the world of investing? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.